I get paid to worry for clients.
We kind of view the seed investment opportunities, which are often just a few $100,000, as putting a toe in the water.
Connections and the knowledge that investors are bring, it's more important than capital.
You know, the Chinese three-legged stool is always the best for family offices, right? A business or a job making money, real estate making money, and a capital market portfolio making money.
In this episode, leading family office experts reveal how they're navigating global uncertainty, uncovering overlooked investment opportunities, and thriving in the face of chaos. Let's dive in.
Going back to, the uncertainty question, what are some worries? What keeps you up at night? And what are some opportunities as well that you guys are seeing right now with interest rates, with the global issues happening in the world right now?
Well, I actually don't have any worries. I mean, I sleep quite well at night. And again, as I said earlier, this is a great opportunity. And when we've done collectively as a family office, the best is in uncertain times. So I say, bring this on. This is, we're very bullish, on investing in real estate, investing in companies that are ancillary to real estate as well. But, I think we're going to have a period in our estimation of another 2 to 3 years of this kind of uncertainty and chaos. And in the meantime, we'll profit on that. So I would prefer that we didn't have this. I'd prefer that we, as a family office, we're not benefiting from people, being in distress. But we have I have an obligation to my family office, an obligation to our investors, and we have to strike. I think we've had the most difficulty making money when times were strong. If you look at our what we're doing now and what we've in the last year, how well we've done. This was our best year. If we look over the last 12 months, 18 months in our history as a family office, we look at times where everyone was succeeding. That is when we not struggled, but didn't do as well. So, I think, for everyone out there, this is the time where this should be happening. This is the time to approach offices like ourselves. We have collectively held on to a lot of cash and are now in a place where, we see opportunities to really heavily allocate.
Might have some Irish in you as well.
Perhaps.
Anyone else want to answer that question?
I'll offer a quick answer. One of the greatest opportunities, again, I'll speak on the tech investment side here, but one of the greatest opportunities for us is not really that first investment, but the subsequent investments that we end up making in a company. And that can lead to some tough decisions because sometimes the company is doing well. It becomes a very simple proposition to reinvest and contribute additional capital. Sometimes the company is really struggling. And for that reason, we do like to try and play an active role in the tech investments that we make. We do like to at least participate as a board observer if we don't actually have a board seat to make sure that we are able to provide some guidance, some connectivity. I firmly believe that a family office that's serious about monitoring their investments is doing more than providing capital alone, but is also providing connections, is providing strategic insight, and is really, in a lot of ways, helping the founders by holding their hands to help bring their company to the next level.
Absolutely. Shinuza?
Yes, I agree with you 100% because most of the time for early startups, connections and the knowledge that investors are bring, it's more important than capital. Some startups come to me to raise funds and ask them, what did you do? Have you pre-sell? I'm building startup. I pre-sold. Why not you do it? Maybe I can do connection. It's much valuable. And especially in today's market, when economies and wars are over there, as an immigrant, as a global entrepreneur, I can say, when you do business in technology, especially, where are you located online? It's a huge opportunity to do business from anywhere globally.
You're right. Bill?
I get paid to worry for clients. So my job is to be a sounding board for when anyone is fearful, whether they're your average Joe or your wealthy billionaire. I have a couple of hedge fund guys that keep me on Rolodex just to argue with me because they say, Bill, if I didn't have you to argue with, I have nobody to argue with. But if you want to look at markets traditionally, when you get compression, when everything gets valued very high, that's when you tend to want to raise cash, to your point, because you're going to get some sort of correction. When 7 stocks were carrying most of the market last year, on January 1, I was holding 28% in cash, which went into the market at the bottom in March. And I did the same thing in 2020. And you have to give your money manager some wiggle room. If I had more than 3% in cash 20 years ago, or even 15 years ago as an institutional money manager, I'd have gotten fired for cash drag. Now it's considered an asset class, and people want managers that are nimble. That's the favorite word since 2008. I want nimble. So when might you accelerate, put your foot on the gas? When you get dispersion, high dispersion between opportunities in both pricing and valuations. And you saw that the market lifted off the bottom this year, but the dispersion was very wide. And only recently are you now getting price expansion or PE expansion as the rest of the market is starting to catch up. You also want to look between asset classes. You know, the Chinese 3-legged stool is always the best for family offices, right? A business or a job making money, real estate making money, and a capital market portfolio making money. And even if you're a real estate biased family office, I tell them you need at least 20% of the value of your real estate in a liquid portfolio, even if it's short duration bonds, to simply operate your estate. This is the same thing I did with one of the most famous casinos in Las Vegas in 2007. I came in and they said, okay, we're only meeting with you because our accountant sent you to us. What do you want? I said, well, I'm here to help your business. They gave me 10%, but they were still open in 2008 when Las Vegas Sands went into bankruptcy. Trump had to redo it, and they redid their casino, doubled the bonuses to their employees, and they carried on. So whatever your bias is, I try and help people figure out a way to be stable.
Yeah, that makes a lot of sense.
Join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.